Okay, quick Tuesday morning radar update. A little drift back into the range on the markets today. Kind of mid yesterday on the small caps and the 250 and the FTSE 100. The DAX a little bit weaker, but not much in it, is there? So let's just jump straight into the volume leaders. It's, are we going to get any window dressing? Well, we haven't got any yet, but for the beginning of the month. But I'll just go through the volume leaders and see what's in there. It is extremely quiet markets. People have had a pretty rough ride. Anyone who's, come to the markets in the good times, guess what? The market's it's 10.05. We should have traded 24% to be on average volume. The markets like to test the extremes of your psychology, and also, if you have risk management, it will test the robustness of your risk management as well. So, BA, big move yesterday. I covered that in detail, haven't I? I've done a lap of honour and everything, so we're going to see a few on here what we saw in last night's screening session. Obviously, I'm just buzzing through to see if there's anything interesting hitting the list what we don't know about yet. This one, I'll say it again as I always say, these healthcare, pharmaceuticals, biotechs, if they're just the ones that trade nicely are usually really in play. Most of the time, all the rest just trade absolutely choppy, and it's usually the more risky ones what trade nicely as well, like the US biotechs. But this is healthcare. It's basically, I see the base. I do see its turnovers positive, accelerating, but an extremely thin number, 7%, and profit and earnings per share are up very strongly. So it was a return to profit, wasn't it, on the last? So we've got a profit breakout. The turnover is actually a breakout as well, but it's a meager reading, is what I'll say. So we see the base, not for me obviously, but just cover it anyway, as we do. Serica, yeah, if you want to know more about buying a pullback, just go back to that video I did on sort of this day here. It'll be on YouTube on the 17th probably, depending on when I loaded it. There's a little point in this, is that you can't be in all these stocks, and the reason being, we've come from an extremely good market, and the market started to drift and then started to get grindy, and someone who's been fully invested and pressuring the margin as well on these big trends, as the market deteriorates, the level of sort of risk what I allocate will go down. So these later moves, what are kind of, for someone who's new to the market and hasn't got any heat in the market, they can take them. For someone who's got risk management underpinning everything they do, you can't keep pressing the buy button when you're unwinding. Basically, I was unwinding from margin. I took it all on the gas trades come off. Margin comes off first, obviously, and shorter term positions. And then it starts to sort of stop me out of some of my big winning trades. And yes, I can reinvest and take more trades, but it's always going to be limited. So when the market's getting a little bit grindy, how many of these, I'm looking at a few what I obviously couldn't take for risk management, reasons. And, that is, it is what it is when it comes to risk management. Your portfolio ebbs and flows into sort of consolidating sort of winners and managing risk, and then when the market gets ugly, it'll put you to a higher cash position. Natural selection, as we called it, of the ones what lose steam and stop you out. Natural selection of the pullback will put you into a higher sort of cash position, and then if the market gets better and increases the risk I can allocate on my risk model, well, then I'll be able to buy again. And the point being, we see the late oil move. Yeah, I have taken part in some of that, but I can't take all of them. But the new leaders of the next market up move, the market model will free up some risk for me to move into some of those, is basically what I'm saying. We don't know if it's going to pull me all the way out of the market or just to where I am now, half out of the market, just less than half, slightly less than half, but we never do. So, Silvana, yeah, it's kind of been in the wilderness, hasn't it, since it hit the story zone. In fact, I'll just reorder these. I'll just go, it's 10 past 10. We should have traded 25% to be our average volume, and then I'll go through them again. Quite a few industrial metal stocks here. HMI, obviously rear view to us. I know it's starting to get... days like yesterday, everyone, man and his dog, will be talking about HMI, but the reality is that, anyone who took HMI yesterday is not sitting on a nice winning cushion from that move. Anyone who bought from the breakout sort of areas is sitting on a pretty nice cushion, aren't they? 100% move out of that base. I'll just take the log scale off so you can see that the reality of how we looked at it. 120% plus. Put the log scale back on so we can compare price action with past price action. D-box, obviously rear view for us. FEN, rear view for us. Maybe we can sort of say this thing is basing out here. It's still up there, isn't it, in the GTRS? I haven't posted. We'll go through them later, won't we? Chariot, obviously we saw that in the swings as well. It's a lose less scenario. It's a pure, it's blue sky, whatever you want to call it. Iafina, we saw that last night, didn't we? CLX, so we drew the reverse vol base in. Let's just go back in the history of this stock. IPO breakout, off it went. It did a big move, bigger than it probably should have done for what it is. What is it? Well, it's not a GARP stock. It's got a PEG ratio of 1.65. It's expected to, the profits accelerating, so it's gone from 3.3 to 3.6 to 5.6, and it's just said that it's going to beat that. So it's getting a good reaction today. How did we look at this in a price action? You know my view on this one. It's not a GARP stock. It doesn't fit the GTRS, what I trade towards, but the price action, if you want to get involved in this, I see a reverse vol base. We saw a swing point off the 10-month area. You get a little ledge here, active low, higher low, higher high. So that's your first sort of area of, and with that being a reverse vol sort of base, because we've got a double top there, it's a little bit more risky, but build a case. It's near the 10-month. That's a good area to be, isn't it? If it's going to hold its trend. So it is holding its trend. It went sideways from there and it broke out. So that means you're definitely wrong here. And it pulled back in. So we saw it on the swing day here. And we said, yeah, I see it. If you buy there, you're wrong down here. It's as simple as that. When I say wrong, I mean last chance saloon, position sizing, whatever. Obviously you can nibble at these things, but you've got a position size right for them. Then we got this little ledge and we said, yeah, if above here is wrong below here for the ledge. and now we've got this punch through on volume today. And will it change where this stock is in the GTRS? For me, not really. It would have to be a sea change, and I don't think it's got to be. But it still won't make the GART register, I don't think. But, you know, stocks can trend for many reasons. You know, guess what? That's the way it is. So, obviously, you know, I'll try and give my price action, what I've just explained there. You know, price action will happen in all good stocks. Good stocks, what are rising stocks, you will see these kind of price action trades. So, and Benz, this one continues, doesn't it? TM1, I've got kind of nothing on this one as well. So I'll leave it there. The sun is out. I'm thinking, do I do a little bit on? I've got to go to, you know, I'm converting my camper van still, so I've got a little bit more to do. Trying to wait for a part as well. But the sun is out, so I do a bit of that while the sun's out. I think I do, and then I'll come back to the spreadsheets, which I'm on a little bit of a rush to do these new spreadsheets. A little thing on risk management, and you know, something I noticed that people are missing is, let me just bring a different chart up to a cleaner chart. On risk to stop. Now on the spreadsheets, you know, I share, you know, how much heat. That's how much heat if the market stops you out of everything against the account. Also, you know, heat minus lot gains as well. So there's three parts to this. Risk to stop. You know, that is how much it's going to cost you on all your portfolio if they stopped out. And a lot of people tend to go into the markets with pound signs in their eyes and come out a little bit beaten up because they haven't respected the very basics here. Risk to stop. That's how much is at risk. You know, if you're going to fumble and mismanage and just stick your head in the sand, walk away from trading, come back when it's better times, you know, this is a real simple sort of thing. I calculate it for people who use my spreadsheets. You know, people don't know what they've got in the markets. They think research is risk management, and it isn't. So risk to stop. I also calculate, you know, all-time stop volatility off all-time highs. So how much, you know, the all-time high of the watermark of the portfolio on a weekly basis is the best way to do that, I would say. You know, it's measured from there to stops, and when that all-time high risk to stop sort of stop volatility is eye-watering, and you decide you can't, you know, you've got to adjust. So this is why you have to make these decisions when you're doing well, because when the market starts to grind, you're not going to enjoy it if you didn't, you know, if you were doing a lap of honour on Twitter while the market was great and, you know, telling people how good you are, like we all do. You know, every time you feel like doing that, go into your spreadsheets, make sure you calculate it first. It's very simple to calculate risk to stop, and go into your spreadsheets and say, hang on a minute, you know, karma's going to kick me up the ass here. You know, just because I'm doing this lap of honour, am I happy with my risk to stop? And if not, you have to deal with it, and you have to basically, you know, hope is not a strategy. So, you know, that's a good thing. It's a crucial thing. It's not just a good thing. It's a crucial thing to think about. And I always try and teach: do it when you feel like telling everybody how good your portfolio is doing. Okay.